Right now, this is a Bitcoin chart zoomed out on the weekly, and there are people that are just thinking it is time for this move, and there are people that are thinking we are going much, much higher. So the people that are bearish right now kind of thinking we are here in terms of last cycle. And I wanted to do this video, not just about Bitcoin, but about altcoins in general, to talk about my approach now to these cycles, because this has been an incredibly long journey for me. And if you've seen my YouTube videos over the years, you might know I've been tracking these cycles for quite some time now. And this is a video I did at the bear market low of 2018. We were speculating on kind of a continuation of the bull market into another bear market, into this current bull market that we're in right now. That's a like $281,000 price prediction for 2025. But that journey that you see there, that gap of time, and now we've closed much of it. This is what the chart looks like now. That gap of time, I was doing my best, tracking the data from so many different angles, as many of you know. And even right now, doing the same thing, tracking technicals, the technical analysis of it all, tracking macroeconomics, all that good stuff. But this cycle, I want to really bring into play this tool. And these are our risk models. And I want to go through how I'm using our risk models in our crypto capital venture intelligence system. And I want to make a note. You might have no interest in risk models. That is completely cool. I think this video will be valuable. You might be in another system that offers risk models. Risk models in the crypto space, they're kind of few and far between, but you might be in one. And I just want to give props to you for being somebody that's focused on data and you're trying to make data-driven decisions. I think it's very smart. But even still, I think this video will be helpful in terms of how you're utilizing those tools that you might be already utilizing. So hit the subscribe, hit the like on the way in. And if you're not in our intelligence system, we have a sale going on. You can check it out in the link in the pinned comment. But this is the Bitcoin risk model. So back here, and this is a very strong, I want to really distinguish the difference here of me back then in this video speculating and me now doing this video. And the same is true for something like Cardano. This was me last cycle, 5 years ago. I think ADA was around 8 to 10 cents or something. I'm speculating about a $3.33 all-time high. And we got very close with ADA, but I want to go to another part of this video. Look at this. I was also speculating about a $5.99 high. And this was fine. This helped me a lot. Like if I go to a Cardano chart, for instance, last cycle, if I zoom out, I did a way better job last cycle in terms of taking profits in the bull market. However, you see all of that speculation I was doing with price, $3.99, $5.99. And you know, we see we topped out around 3. If I had better tools back then, I could have capitalized even more then. But now, if you look at a Cardano chart, if you look at an Ethereum chart zoomed out, if you look at a Bitcoin chart zoomed out, if we get a continuation of this bull market and altcoins specifically start breaking all-time highs, I'm better positioned because now I have our risk models in play. And in this video, what I wanted to do was kind of just talk about how I'm using the risk models. And I want to do it within context of what's going on right now. Because I started the video kind of just being like, you know, there's people that think we're about to enter a bear market similar to right here. And right off the bat, when we're starting to talk about how am I going to utilize risk models, it's very simple from a surface level to say, hey, if you look at a bull market, when we start getting into these higher numbers, like 100 on the risk score, 100 is the top end. It means it really is signaling to sell, right? We start getting in the 90s, sell or take profits. 80s, take profits. And you know, on the flip side, start going below 20, accumulation phase. And this is a Bitcoin risk model, by the way. This is like 2018 bear market. Imagine having this signal. It's saying, hey, buy, right? Or even last cycle, start averaging out. We're in the 90s on risk, sell. Well, we have it now. But again, it's not that simple. I'm going to speak to how I'm going to leverage this in terms of taking profits and my exit strategy. However, it's not that simple because we have, again, people that are looking at this chart and like, man, this looks like right here. We're going lower. We're entering a bear market. But guess what? They're maybe not taking into account this chart. And even when we're about to go look at the risk model, and there are so many data points in that risk model, we have to take into account things like this and this chart. This is the Fed balance sheet. We've been in contraction phase for years. This is bear market territory. This is why, you know, we saw just, you can see back here, March 2022, boom. We go to a Bitcoin chart, right? Zoomed out, last cycle, March 2022, right around there somewhere, boom. Well, now we have the opposite happening. Look how oversold this chart is, for one. I just think it's so funny having an RSI on this chart. But we're waiting for quantitative tightening to slow down. Not even to come to a complete end, but slow down and quantitative easing start slowly ramping up. This is bull market territory for risk on assets like crypto. This is incredibly important when using something like a risk model or any other tool that you're using out there. Maybe you're not even using risk models, but we're using other tools outside of technical analysis, focusing on things like, what is the Fed doing? What are money printers doing? Are we in contraction phase, right? Contraction phase, or are we in expansion phase? There's the last bull market. Are we about to enter expansion phase, the upcoming bull market? Now we have very important context for these charts, and these are the risk model charts. So we've already identified, obviously, the risk models are like, hey, we get to crazy high scores, you want to start taking profits. And our exit planner, we've just implemented risk mode, is back here, and it allows you, this is an XRP example, it allows you to go over to risk mode. Here's the risk model for XRP, and you can actually start planning your exits within the system and being notified when certain risk levels are hit. So if you look at like last cycle or 2 cycles ago, imagine XRP getting an email, it's hitting 100 or even 88 in December or 90 in December 2017, getting an alert, hey, good time to sell. It's one thing to have price mode activated. You visualize your gains, you put your areas on the charts where you want to start selling your XRP. This is exactly kind of what I was doing last cycle. You know, we're visualizing what could gains look at $5.99 ADA. What could gains look like at $3.33 ADA, right? $3.33. You can speculate, and that is very important. This is a very useful tool, right? Speculating, and more so visualizing. It's that visual exercise that happens on the screen that is powerful, because you are kind of committing to yourself. When we reach these levels, I visualize this now. It's going to be way easier for me to implement. So yeah, set up your alerts, get, and sell at certain prices, but risk mode is going to take the emotion out of it. And so this is the biggest way that I'm using risk models right now. And that is, if we're going to get an altcoin bull market, when we're looking at a risk model for like Cardano, for instance, if we start getting into this territory and things are getting crazy, guess what? No matter where my price cells are kind of set up for in my own mind, based on what I think Cardano will do this cycle, well, this risk model is going to really be the guide that helps me to slow down that selling or ramp it up, because it's just getting too, overbought too quick. And that's just something none of us know. We just do not know how that is going to happen, what it's going to look like. But what I do know is the risk model right now sitting at a 36. But here's the deal. This is another way that I'm using this risk model, and all of these risk models. If we go back to Bitcoin, for instance, very good example. It's sitting at a neutral area. It's like 53. It's like right in the middle. And that is interesting when we're looking at a Bitcoin chart, because it is kind of like that. There's your group of people that think we're going lower, and there's a group of people that think we're going higher. And here we are in a risk score right in the middle at 53. So how am I using that though? I'm using that in the sense of, if my thesis, which is bullish, does not play out for Bitcoin, and I should even mention for altcoins, this is the altcoin risk model. It's at a 20. The bull market for altcoins has not happened. This risk model and even this heat map that you see here, the risk level chart, you can just see the bull market has not happened. It has just been years of consolidation and coiling. But instead of just simply waiting on a bull market, the flip side is, what if crypto does start falling? Like, what if Bitcoin starts falling and consolidating in a way in which the bulls are just not ready? Even the macro bulls are just not ready for it. Well, in this world where governments are rushing to buy Bitcoin and institutions are rushing to buy Bitcoin and soon altcoins, we have altcoin ETFs on the horizon. Well, if Bitcoin starts falling in the risk score, right, and we don't actually start seeing an increase, we go back, we start getting into like the 30s or even the 40s. I think the 40s with the current state of Bitcoin is a phenomenal area for potential accumulation. I'm not saying that's my area of accumulation, but I'm just saying that's a very nice, at least, roadmap for what's going on in cycles if Bitcoin's falling into the 40s. I want to point this to your attention. Even in the most recent consolidation, Bitcoin in September fell to 36. In this very most recent, it fell to around 42. And that was the beginning of April. This was the tariff fear event that happened. That was a very good opportunity for Bitcoin in this new macro state that Bitcoin is in. That's kind of the point that I'm making. So I'll be using this Bitcoin risk model in that regard. But you can just see, if we start falling into the 30s or in the 20s, then we're in like bear market lows territory, right? You can see the recent bear market, we fell into single digits. Obviously, it wasn't there very long, but what an indicator. And the same is true if we go to an altcoin risk model. If this starts falling again into single digits, I mean, we're at a 20. We're at a 20. If you zoom in here, you can just see most recently it was at a 13 in early April. I mean, this signal is massive at that moment when that was happening. That is a very low risk area to accumulate. And we're still in a pretty low risk area to accumulate in my view. But the point I'm trying to make is we keep an eye on all of the macro developments that are happening. We keep an eye on, yes, the potential for downside. It's always in play. The potential for just continued consolidation with altcoins. And we go to a Cardano risk model, maybe more consolidation, similar to back here. Cardano needing to fall into the 20s, for instance. That is such a powerful tool for continued accumulation. Go to something like Ethereum and all the altcoins that we have back here. We don't have every altcoin. We're continuing to add some as requests come in, but it's a very unique thing to build a risk model for an asset. But this is how I'm using the risk models. It's not just, hey, I want to plan my exits. It's a very big piece of it. And using price mode and risk mode becomes incredibly useful. I feel like this is such a unique advantage to our users that are in this system right now to be able to do this and to have this data at their fingertips. The data is the risk model data. And we're talking about, how we've built this. It's an advanced risk algorithm. So proprietary weighting algorithm, emerging asset theory, game theory integration, price volatility and volume. And there's more things coming that are going to kind of make this more dynamic in terms of data. So like machine learning, institutional inflow data and outflow data, I guess, sentiment and analytics, on-chain analysis, so much. But that's the whole point. It's like, it's taking that emotion, it's taking the guesswork out of the entire thing. This is guesswork, backlash cycle. And there's a certain amount of usefulness in it, right? That's why in our exit planner, we have price mode. Because, I mean, this is one of my favorite tools. To be able to go in here and set my prices and visualize the gains is awesome. But while that is playing out and that story is playing out, having a risk mode activated and being able to see where we are and say, you know what, looking at your exit planner, we're at like 100 already in risk score. It's time to take more than 25% off the plate right now, right? So you can just see how this can be tweaked and changed as time goes on and the risk models are updated. But that's what it is. It's obviously, if we're in a parabolic move, a bull market move, it's taking profits. But in a bearish move, and these risk scores are falling on these charts, it's really getting a sense of, man, we're on something like an altcoin risk model, pretty low risk right now. But if we're getting into like previous bear market territory, single digits on this altcoin risk model, that could be a strong indicator for the flip side, which is accumulation. And we're going to start eventually working on a DCA tool back here to utilize these risk models as well. But right now, I think, as we look at where we are in the cycles from even a Fed monetary policy perspective, in this Fed balance sheet and what's going on, even across the globe, not just US, I think there's a very strong potential that we get a very powerful move for crypto, for altcoins, for everything. So I wanted to break down how I'm kind of using these risk models right now and how I'm thinking about them. It's not just like, man, we have our risk models, I'm waiting for them all to go parabolic. It's not just that. I'm also using these in the short term to identify kind of trends and also spot the lower risk areas as well. So I wanted to bring this up as we kind of continue to navigate through this current cycle. Let me know your thoughts in the comments. Again, I would love to have you as a member. I'd be grateful to have you on as a member. I'm incredibly excited to continue building this new business of mine and these tools that we have. We have so many cool things on the horizon. I'm going to actually be announcing soon one of our new big deployments that is coming pretty soon. And that's AI related, and it's going to be incredibly helpful to our members back here in the system. So if you enjoyed this content, please subscribe, hit that like button. I appreciate each and every one of you. I'll see you in the next video. God bless.